Hello, and welcome back to Explain the Charts. Today, June 17th, 2025, we're analyzing the SPY, the S&P 500 ETF, by looking at recent news and then diving into the charts. Recent news indicates some conflicting signals regarding the Iran-Israel situation, with initial reports of a truce followed by denials from Iran. Trump's comments are also adding uncertainty. The Federal Reserve is scheduled to have a two-day meeting, and the markets are anticipating whether any rate cuts are possible. Let's dive into the charts and see how these events may be reflected in the price action of the SPY. Here is the daily chart for SPY going back about a year. Looking at the daily chart, we can observe that SPY has generally been in an uptrend for quite some time, but there have been periodic pullbacks and corrections. Note that early April saw a steep drop from around 565 down to 505, but quickly bounced back, consolidating at the 525 to 550 range for most of April. May saw us reach new highs and test resistance in the 530 to 535 area. Late June shows a dip back down to 545 before slowly grinding upwards, reaching 560 in July before dropping to 530. That was followed by a steady climb upward until September. Around September 3rd, we saw a steep decline from 560 down to 540. Then, after a small jump upwards, a further decline that bottomed out around 505. October through December shows a slow recovery and steady uptrend, culminating in a relatively steep drop mid-December. That was followed by a quick V-shaped recovery to close out the year. And so far in 2025, it's been mostly uptrend and pushing to new highs, though early April had a dip down to the 570 to 580 range. The most recent candles in June show that we're still moving upwards. Now, let's switch to the hourly chart to get a more granular view of recent price action. This will allow us to see intraday trends and potential entry/exit points more clearly. On the 1-hour chart, we can see more short-term volatility and patterns. Let's look closer to today's action. I'm narrowing into the date range of June 12th to June 16th on the one-day chart to show the detail. On the one-day range, looking at the 1-hour chart, we see that we bounced between 600 and 604 for about 2 days before dropping on June 13th. June 16th then shows a large range of volatility, with a high of 604.45 and low of 600.22 before closing just above 602. Now, I will zoom in on the 15-minute chart. I'm narrowing into today, June 17th on the one-day chart to show the detail. Today is June 17th, and we see a fairly small range of candles going up and down. Key price levels to watch on the daily chart include the recent highs around 604, which could act as resistance. On the downside, potential support levels are around 570, 540, and 505. A break below 570 could signal a deeper correction. If the news regarding interest rates is dovish, then we can expect a breakout above 604, possibly testing new all-time highs. I give this a 60% chance of happening if the Fed signals rate cuts are coming soon. On the other hand, hawkish signals from the Fed, combined with renewed geopolitical tensions, could lead to a test of the 570 support level, with a 40% chance of happening if Trump continues escalating the conflict.